Every market. Your financial partners, Don and Gino.
Welcome back to the Don and Gino Real Estate and Finance Show every Thursday, 12 p.m. to 2 p.m. Brought to you by KHTS. That's right, AM 1220 KHTS every Thursday. And also brought to you right here in the Vault Media Studios, our custom-built studios. You got to check it out. Go to donandgino.com, donandgino.com. Check it out because we have 3 HD cameras on us now. Furman with AP Production is trying to make us look good. Luckily, he now has the cameras pointed at our guests, and that makes us look much better. And we got great guests today with Chris Ingram with Infinity Wealth Management, a good friend of ours, training partner, and our confidant when it comes to what should we be eating and not eating and how to work out. Chris knows the answers. Everybody in our gym goes to you, Chris. It's hilarious. And they're like, well, what does Chris think? You have become like our local, the guru.
Fitness
total
guru.
Fitness guru.
The people at Afterburn are just as good. You talk to
they
them.
Are. They are. But you're part of that, though. You're basically a trainer as far as anybody else is concerned. And nobody wants to compete with you regarding fitness anyways. I know I don't.
Actually, but let's bring that up real quick because I don't want, we've already talked quite a bit about Afterburn, but it's really about that camaraderie. It's the fact that trainers are friends and friends are trainers, and really everybody's one big group looking for the same outcome.
All the new members that have joined this challenge, the thing I hear time and time again is I'm going to stick around because I've made so many good friends and the camaraderie is so good at the gym. That's I said to somebody the other day, why would I, even if I was disappointed with Afterburn, which I'm not, I absolutely love them, why would I leave? Because my friends are there. I can't leave unless you guys all come with me. I mean, what am I going to work out by myself? I don't want to leave you guys. So you get drawn into the friends and the camaraderie.
It is awesome, and it definitely motivates. There's a lot of mornings I wake up and I'm like, I know I'm going to catch heat on my Facebook page as soon as I don't show up. So it's been great.
Right. That's the thing. There's a little bit of accountability, if you want to put it there. And that's what makes me go every day when I would like to stay in bed and just sleep for that extra hour. You have friends there that are looking for you. They expect you to be there.
Well, and I think that, when people say, right, because I've tried this weight loss thing a few times, right? So this, I was, for those that don't know, I was 305 pounds and I'm 229. So the only reason this worked this time is the camaraderie and the friendships and the accountability.
Yeah.
Yeah.
Right. That's it. That's the magic formula is that.
Yeah.
Because doing it on your own, and like I told Shannon yesterday, I said, I might let myself down, but I won't let her down.
Right.
And it's easier to not let your friends down.
Well, and that's why we're putting together APRG, America's Professional Resource Group, is because there's only certain things we can help with. I mean, we can help you out with a mortgage, but what if they want sound advice from a financial planner that we can trust? What if they, unfortunately, are dealing with the divorce situation? What if you need a good tax professional? All these people that we have put together are accountable to this town. They're the best there is. And that way we can make sure that you get all the answers you need from people that are accountable to our community for years. Most of our professionals are 15 plus years experience in this town. It's been great.
Right.
Okay, let's touch on one more subject before we have to let you go, because we have Becky Seal coming in to talk about a very special project she's working on. A little tease there, huh?
Yeah.
Huh? All right, so let's talk about interest rates and how it can affect both either your portfolio, because everybody thinks it's safe to be in bonds. We've been hearing that for, the last 10 years. And we'll talk to Pam about how interest rates may affect your ability to buy a home. We've been talking about this. So let's start with how it can affect your portfolio, because let me real quick to set this up. Here's the analyst. We talk about how we feel interest rates are going to go up. They're going to have to go up eventually. Sorry, that you don't need a crystal ball for that. It's going to happen. Here's what Fannie Mae says they project in 2015 rates to be 5.1%. NAR, National Association of Realtors, 5.4%. Freddie Mac, 5.3%. And the Mortgage Bankers Association, 5.1%. There's a theme here. Rates are going to be above 5% down the road.
Right.
And I have to agree with them. I mean, and Gino, you eloquently were talking about on our break about that means the economy's doing good. If they're raising interest rates,
yeah, I mean,
it's not all bad.
No, it's not all bad. And you alluded to it earlier that, in 2000, interest rates were 8%. I remember the first property I bought was in 2002. I paid 6.875%. And economy was just booming. I mean, really a fantastic time for the U.S. economy. Unemployment was at record low numbers. So a lot of good things come with high rates, but you have to be well prepared. So I think, Don, one of the things you're asking of Chris is to say, how do you reallocate your portfolio so you don't get hurt by this coming rate increase?
Yeah, let me do a quick explanation. So you buy a $100,000 bond today, and that $100,000 bond lasts for 30 years. And they're going to pay you 2% on your money for the next 30 years. Sounds safe, right? As long as you hold it that 30 years, you're going to get your $100,000 back at the end of the 30-year period. But what happens if that 2% interest rate jumps up to 5%, okay? And then 2 or 3 years from now, you want to sell that bond. You want to get out of it. Well, if somebody can come to me and buy a bond paying 5%, why would they want your 2%? Okay, so the only way you're going to be able to sell that 2% bond back to the market is to sell it for less than the $100,000 that you paid for it. You're going to have to give something so that the purchaser basically is getting that bond at a 5% interest rate. So there's math that will figure that out for you and calculate that for you. But that roughly you're going to take a loss on it in order to get out of it. So that's how rising interest rates hurt bond portfolios. And if you're in a portfolio of like a mutual fund portfolio of bonds, it happens immediately. The bonds get revalued on a daily basis, and you see your mutual fund price start to drop based on the value of those bonds within the portfolio. So the first thing to know is that longer term is more dangerous. If I own a bond that only lasts 2 years, I'm not as concerned about where interest rates go because I'll just hold it to the end of my 2 years, let it mature, and I get my money back. But when you're holding long-term bonds, the movement of the price of that bond is going to be much more significant when you have a rise in interest rates. So the first thing you want to do with your bond portfolios is move out of the longer end of the yield curve. Start shortening up, getting into shorter term positions. It doesn't mean you have to completely go out of bonds, but start looking at limited term, short term, fixed income. The other things that you can do is there's something called floating rate out there. Floating rate is like the float rate that the banks use. It's a variable rate, and it rises with interest rates. So pull some money out of those longer term fixed bonds, roll it over into some floating rate securities that will actually get better performance as interest rates rise, and you still have a fixed income investment in your portfolio, but one that's going to benefit from rising interest rates, not lose from rising interest rates.
I'm going to pause you right there because that's something I want to learn more about. So do you get paid a fixed margin over a certain index on those products?
You talking about the floating rate products?
Never heard of that before.
No, typically, I'm talking mostly about the exchange traded fund or a fixed or a mutual fund that's made up of a floating rate investment. So that interest rate that it's going to pay to you is just a variable interest rate that you're earning on the portfolio, and that variable interest rate is going to adjust with interest rates over time.
Okay, so another show, I definitely want to dig into that, but we don't have a lot of time for that. So if you just heard that and it piqued your interest like it did mine, Chris, how can they get a hold of you?
Yeah, Chris Ingram, I'm at 661-255-9555, extension 16, or you can email me at Ingram, which is CINGRAM at nextfinancial.com, nextfinancial.com.
That was really unique. I had to stop him there because
I love, Chris, how you express that you by working with a professional that understands what you were just talking about. I know went over a lot of your heads out there, which is okay. That's why you hire Chris. Or you work with somebody like Chris, because a professional can go, okay, now you're concerned with interest rates going up, therefore your bond portfolio going down. What's cool is Chris goes, no. Now we put the money over here, and as rates go up, you earn money. That's where the smart people make money. It's not you out there trying to think that you have this all figured out. You might not even know that you can earn money as interest rates go down. All you're doing is watching your portfolio go down. Work with a professional. I promise you, you will make more money by working with a professional. There's a reason we're all out here, is to help you and guide you in the right direction. Speaking of that, we want to touch on real quick, Pam, rising interest rates. You've been in this market for a long time. You've seen markets come and go, up and down and everything. interest rates going up, we both feel, I'll let you answer this. Do you not feel that this is still one of the best markets to purchase a home?
This is a great market. I won't say we're at an all-time low for housing prices, but we're still at the bottom of the market. Historically, we probably are looking at 7 to 10 years of an increase in the market. But as interest goes up, your buying power goes down.
Huge.
So depending on how much you can afford on a monthly basis, what you qualify for, you've got to take advantage of the interest rates that are there today and the housing market. I mean, prices are good.
Mm-hmm.
It's a great time to buy. As the interest rates go up, like you both have mentioned, we're going to be looking at adjustable rate mortgages. There's going to be other options out there, but they're not as good as they are today.
Yeah, one thing I'm going to say about adjustable rate mortgages is if you are being, I'm not going to say coerced, if someone is suggesting that you take an adjustable rate mortgage strictly to qualify for more home, be careful.
Yeah.
Take a breath. Let's not go back to where we did it in the past. Adjustable rate mortgages have a place. They're a wonderful tool if used appropriately, but if it's just being done specifically to qualify for more home, proceed with caution.
Yeah.
I will never forget a few years ago, somebody came to me and said, I'm being advised to get an adjustable rate and I can get into the house that I want and I'll refinance in 2 years. And I said, wait a minute. If you don't have any equity in 2 years, you cannot refinance.
A lot of people got stuck with that.
A lot of people, because there are a lot of people giving bad advice. You need to talk to a realtor that has been in the business, that knows what they're doing, and is giving sound advice.
And I suggest a local realtor because they know what's going on right here in Santa Cruz. So reach out to Pam Ingram at RE/MAX, PamIngram.com.
PamIngram.com.
All right, see, it's that easy. Thank you guys. Chris Ingram with Infinity Wealth Management.
Thank you.
Pam Ingram with
Thank
RE/MAX.
you.
You guys are awesome.
This was great.
All right, and we will be right back. We have a special treat for you. We have Becky Seal with Troop coming in to speak about Special Olympics coming up. That's right. The Olympics are coming back to Los Angeles in 2015. Did you know that? We'll talk more when we come back to the Don Gino Real Estate Finance Show.